critical moment in history and time, and this is where politics and finance overlap. Personally, it was an opportunity to be realistic and honest with the American people, with the American markets, with the American banks, which was contagion effect globally. But Bernanke is a politician. I think, by the way, his Nobel Prize should have been for fiction writing, not for economics, because it's absolutely anyone can be a hero for creating money out of thin air and calling that a solution because it bribes and buys time. It buys office. Politicians in the White House, left, right, or center, don't want to admit to a recession. None of them do. Their main priority is reelection, and that's just been true almost without exception. No politician wants to face a financial crisis, and the easiest thing is to go to the bar and crank out the bar tab and print more money to avoid it. And central bankers are just politicians, and they're just wolf in sheep's clothing. They claim to be independent. They're more than they're linked at the hip with our financial and our political movements. So central bankers want to look good. Politicians want to be reelected. So the psychology of power and the corruption of politics in 2008, Bernanke and Geithner and Paulson got together, former bankers and politicos got together and effectively solved a crisis by creating money out of nowhere, which is inevitably addictive, inevitably inflationary. That was an opportunity to just admit that banks were over their skis in debt with subprime mortgages and toxic, asset-backed securities or mortgage-backed securities. That was a time to see guys like Jimmy Kane and Dick Fuld at Bear Stearns, Lehman Brothers, or frankly, even at Citi and Goldman. Some of these executives should have been called to task and punished, not rewarded. So it created a massive moral hazard. And we could have had what von Mises would call constructive destruction. Whether you're on a football team, a polo team, whether you're studying for the bar exam, or whether you're, competing for entrance into grad school, you got to compete. And the strong survive and the weak get pushed aside. It's the same thing with companies. It's the same thing with banks. It's the same thing with governments. If you're in debt and you have bad debt, you have to punish the banks that levered that debt. You don't bail them out. You don't call them too big to fail and then save them and put that on the taxpayer's back. And that's effectively what happened in 2008, 2009. Again, Bernanke promised it would be a short-term solution, that there would be no consequences. Well, it ended up lasting for over a decade, and the consequences was it's completely neutered the inherent purchasing power of the currency. Regardless of the dollar's relative strength, its inherent strength is weakened. And again, that goes back to von Mises. All debt bubbles lead to a financial crisis, which leads to a currency crisis, which devalues the currency. And we're not going to be able to avoid that. So I think the opportunity in 2008 was to be austere rather than to be cowards and effectively, solve that problem. There are many who disagree that that was an essential measure. We needed liquidity. We had to save the markets. ATMs around the world would have been closed down. The financial system would have ended. I think all they did was postpone a much, much bigger problem, which we're heading into, which will be a reset. It's already been telegraphed by the IMF and most of the banks, and now there's a Fed coin. They're already paying the price for the sins of 2009 now. They just postponed it, and they bought us a huge market bubble, a huge wealth transfer, but they also bought us a cancerous amount of currency destruction, debt destruction. And, I think the decisions made in 2008 were historically poor, but they felt good at the time because everyone was terrified. They convinced us that the world was going to come to an end if a few banks failed, or frankly, if all the banks failed. They should have been restructured. They should not have been bailed out. That's my strong opinion, and I'm an alumni of those banks, and I'm an alumni of the hedge funds that brokered through those banks. But the leverage was unforgivable, and the behavior was openly clear at the time, not in retrospect, and it was just a ticking time bomb, and the counterparty risk was appalling. And so, no, I think it was a terrible decision made in 2008, and the crisis that's going to happen in the next year or two, it's already happening now, in my opinion, is the direct consequence of, frankly, the cowardice of the administrations in those days. Because again, everyone wanted to be reelected or look good or save their positions or quote unquote save the world. Again, for Bernanke to get a Nobel Prize for that, I think many of us on Wall Street are laughing about that. That seems like a very political propaganda prize, not a merited prize by any stretch of the imagination.